Hello everyone, this is today's video analysis for March 8, 2019. Today we're looking at the USDCAD, the US dollar, versus the Canadian dollar for today's trade analysis. First off, before I look at the charts, it's very important for me to, of course, recognize about 30 minutes or so, 35 minutes from the recording of this video, there's significant news coming out for both the US and Canada. It could dramatically change everything we're talking about here in this video. But Canadian employment data, U.S. non-farm payrolls, unemployment rate, earnings, and whatnot. So just a slew of data coming out for both countries at 8:30 a.m. and again, could dramatically change everything we're talking about. Obviously, this currency pair in the past week or so has been in a significant rise, significant uptrend, pushing from the 1.3150 level, the pink zone down here in the middle of the chart, all the way up now into the mid 1.34. So quite a significant rise in just the past week or so. Green shaded area up here towards the top of the run. We're looking at 1.3420, 34.45, currently sitting on top of that as support. So what we're looking at here is a potential breakout setup. You know, if we throw out the news for a moment, take away the news, if we didn't have that today, you know, clearly it's above the what was a resistance zone in the past couple of days, now acting as support. We'd be looking for a long or a buy here as the market continues to rally and go up. But you throw in the caveat of the news, I just don't think it's that simple for us today. We need to be cautious. We need to use appropriate risk strategies, but definitely something that piques my interest as we look at the dollar CAD is that how it's been such a significant rise. You know, all it's going to take is really good non-farm payrolls for the U.S., some really good strong data for the U.S. that would help to drive this higher. If we get poor data out of Canada, you know, unemployment raises or employment changes not what they thought it would be, you know, poor news out of Canada, good news out of the US, we're going to drive this higher and the breakout becomes a real deal, and we look for it to go back into the 135 or even the 136 level as it continues to go up. If we get, of course, the opposite of that, bad news for the U.S. Non-farm comes out disappointing. Unemployment rate rises or earnings are down for the U.S. This may sell off, get back under the green zone, go down. Strong data, positive movement for the Canadian dollar. This, of course, would also go down. We also, you know, often talk about in the live trade room that one little factor that also affects the Canadian dollar is the crude oil prices and how that affects the dollar. We'll look at that later in the trade room, but I think specifically right now we're watching the employment news out of both Canada and the U.S. for the critical information we need. If they both come out positive, you know, that's an interesting scenario as well. If the U.S. and Canada have really good news, or both come out negative, really bad news, that could counterbalance each other. You know, it may not have any significant movement, or it could be just volatile, whipsawing back and forth for a little bit. So definitely something that you need to take into consideration is the news. Probably don't make a trade decision before that in the next 30 minutes or so. Zooming it in, obviously we're sitting on top of this what was resistance now acting as support. It's going to be much easier to see on the 4-hour. Back underneath it, we'd look for it to go lower. You know, I just look at examples. I like to look at historical examples and say, hey, this is what we kind of saw the last time it got above a resistance right here at the yellow zone, and we're in a similar scenario right now. It's not exactly the same, but it's a similar scenario. So if the trend continues, if again, positive U.S., negative Canada, we're looking for it to stay on top of your challenge back to 34.90, 35.15, the yellow zone or higher as our next resistance, and of course higher than that. Back down, blue zone, orange zone, clearly the next target's lower. 4-hour time frame, just a real quick peek at it here. Take a look at what's happening in the past several hours, just sitting on top of that green shaded area right here. So again, I would say if we threw out the news, if we didn't have the news, I'd clearly be talking about buying the 34.45 level. But of course, we need to be cautious. We need to use appropriate trading decisions as traders. And let's wait till after the news. Whatever happens, we'll look for opportunities to dive in after that.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.